Okay. Welcome everybody to today's episode. So today I think it's a think um we are having an interesting price action here because from the daily, if if I'm really looking at what I'm seeing, we can see that all of these zones have been mitigated, right? So now we are we are mitigating this range here. Within here was a flip, something like that. A flip. We swept to this zone. So you can see here it was a flip zone. From the daily, we've mitigated this, right? This one will be the factor range where we respect the major tap. Okay, so this one is a strong structure and this is the weak structure. So on the 4 hour, we are trading within this bullish range, right, from here to here. Looking at what I'm seeing here, this 4 hour range, because here is the last, it doesn't have any inducement. Maybe this one can be used, this one has been used as inducement for those that are wanting to buy here. We've swept this and we've seen massive move impulsively, right, to the upside. So from I think last 2 weeks we were selling. From last 3 weeks we've been selling for a long time. From this move we had this buy move here, we had this, even this buy move, it was great, and we sold off last 2 weeks to this week, right? And this one start I think Wednesday, Thursday, Friday. So this is the current structure on a daily. Looking at the daily structure that we are trading within, it is something like the 4 hour. It is like the 4 hour zone, but this one we've gotten a break, right? So on the daily, okay, so looking at this structure like this, we've had something like a strong liquidation, because okay, it didn't happen though. We broke to the upside and we liquidated to the lows near this zone, right? We had a lot of buys from this zone. And we came to the downside, tapped into the zone, grabbed more liquidity into structure here, and price continued the move, and now we are pulling back. Ideally we haven't tapped into the we haven't tapped into these lower structures here, right? We moved impulsive, we are moving impulsive back to the upside. But looking at what is happening here, this is just in other words, it is supposed to be the swing, the internal pullback, right? We are switching bullish to facilitate this pullback into maybe here, and then we will continue the move to mitigate this range here before the major move can happen. In other words, we are not expecting this bullish, to last long, but price can still continue to the upside. And here's our strong structure. If price breaks this structure, then we have switched bullish, and we will be, buys for forever, until we switch bearish. But now this bullish did a pullback. By looking at this strong structure, you can see all of these candles broke the candles low. So here and there, we are trading on the daily. This is the swing. This is the internal structure. By looking at the internal structure, you can see that all of these candles started from here. All of these candles broke the candles low here. So all of these candles broke the candles low, which means this one is a fractal structure, and you will be expecting the fractal pullback, or the fractal structures to switch to facilitate the internal pullback, and the fractal structure will also switch again to push the internal continuation until you mitigate the major zone. So now, what are we looking at here? This zone is a weak zone. Why? Because it hasn't broken anything. As I've already said, all of the candles broke. So this one is a fractal high. Let's see, that place will be our change of character. This is the internal structure. Here is the swing. Here is the fractal. This is an interesting price action. So looking at this zone has already been, it had 8 mitigation. Let's see. I think, yeah, we had, let's say we just tapped into this structure, and we continued the move, right? And now we are having deeper mitigation, right? Since we already had a mitigation here, we are expecting price can still move away from here, and we can break the low. The idea is we pull back. The idea is we will pull back into here, and then the price will continue the move. We will pull back to here and we'll continue the move, or we will pull back into here. We will do whatever you want to do here, but we will target the lows, because we have a fractal strong structure here, an internal strong structure here. Okay, yes, but the swing strong structure is at the lows. Cool. Now, which one is the strongest? The swing structure is the strongest. Swing structure is king, and the daily structure is, bigger than the 4-hour and the 15 minutes. Looking at this daily structure, we can see how this impulsive correction, and then we have this bigger corrective structure, and then price moved impulsive. So we can have a corrective move, and we can continue, or this move is ending. If we break this, we can anticipate an internal. We can anticipate the internal bullish to finish. And if the internal pullback, which is this bullish, will switch bearish again, we will continue the move to target the week. But all of this structure, this one is just an internal structure switching bearish to facilitate the pullback. Now, looking at what is happening here, you can see that price is well within the premium, well within the discount, right? This place is called EQ and not emotional intelligence. You mean equilibrium. EQ means equilibrium. Here is premium. Here is the loose. The loose is discount. Here is premium. So I think looking at our lessons, we will add premium and discount pricing. So here is premium. Below the EQ is premium. Below the EQ is discount. Above the EQ is premium. When price is within EQ, it means price is balanced. We are ranging, we are at equilibrium, we are at equal, right? Price is at fair value. But when there is an imbalance within price, one price has to switch to one side, right? When price is within discount, it sends a sell signal to buyers. It means price is cheap. Since price was once here and now price is now here, it means if you are going to buy, now is the time. If you are going to buy, now is the time. You will expect an impulsive move, a corrective move like this, and a continuation. Oh, that's not what we are expecting. Why are we expecting that? The main reason is here is a strong structure. Here is the last bullish order flow. Here is the last demand region. Here is the unmitigated extreme, right? It is also a sweep zone. Let me put my little S here. It is also a sweep zone, right? We swept liquidity and price moved to the upside. So this zone, if price is going to turn around from here, we are expecting price to do, if we are expecting price to continue the swing bullish structure, we are expecting it to do from the lows. We are expecting it to do from the lows, from the unmitigated extreme. So you can see something we call a demand chain. So looking at this, you can see we have, it is part of a demand change. A demand chain is a series of demand mitigation. We will get much more into that. So we will get much more into supply and demand later. Yes, this one is the structure. I'm talking more about the structure. So we can see this is a demand. This is what we call a demand change. A series of demand mitigation. So all of this demand has been mitigated. This was the last demand that hasn't been mitigated. So we are expecting price to mitigate this one as well, and we will continue the move. From market structure perspective, we don't expect the swing structure to break. Why? If you've already watched the previous lessons, you can probably say why. You are now saying it, or it is even triggering this kind of thoughts in your mind. The reason why we are expecting this low to hold is because it is a strong structure. 2, in a bullish market structure, the lows are strong the highs are weak. Here is the high. This is high. This high has been pushing price to the downside. But as it approaches this low, we expect those who stepped in here to step in again to continue the move. Right? So there's a probability price will push here. There's a probability price will pull to the downside, and we will continue the move to the upside. So enough money here, there's demand mitigation here, there's a sweep zone and all of this kind of stuff. Now the fractal structure is against the swing structure. The internal structure is also against the swing structure. Are we going to jump in right away and buy? No. We can jump in and buy within premium. We've already moved quite low, right? We are getting closer to the strong structure and all of this stuff, so we can expect that the lower high is forming, and then price can continue. If you are going to continue bullish, we will do it from around these kind of zones. Okay, looking at this, how do I call it, for our the daily internal structure that delivered price here, we can see this is what we call supply chain, a series of supply mitigation. So we have demand chain, supply chain. So this one is a supply chain, this one is a demand chain. This the lows here, we have demand chain, and even within here we have demand chain. So it's more like it gives validity to the trade. The moment demand starts to fail, then you can start to expect bearish supply to hold. So here we have strong supply holding. All of this demand has been failing, right? All of this demand failed. It just caused the flip. So this one failed. A whole lot of demand has failed, but supply has been holding, right? So we had valid supply here. All of this has been holding to the lows. Now, to get confirmation, you have to see supply failing. The moment the supply will fail and the structure will change, when we get a failed reaction and a change of character, we can start to expect, although change of character is a signal for internal pullback, we can start to expect price to push up, because you are getting closer to the lows. Although we haven't also mitigated the lows, but it's a probability game. So looking at this from the daily, we can see that this lows, this supply regions, this structure that delivered price here was impulsive. The characteristics of the structure is not encouraging the exhaustion of the structure. So here is although a weak structure. When price pull back into this structure, I can expect price to continue to the upside, or we can break this, because this is a weak structure. We haven't break anything. And we also have another zone here. So looking at this fractal structure, we are expecting the fractal pullback. Right. This is the fractal structure. We haven't broken anything. This is where a candle failed to close below the candle's low and started to pull back. So this is a fractal pullback. When this fractal price is pulling back, we are expecting price to pull back into premium above EQ for price to be well priced so that we will continue the move. So now price is within price within premium. We've mitigated the larger zone. We have this fractal supply range here. We are expecting the fractal structure to switch. If it does, means we are having an internal pullback, or this low is holding. But looking at liquidity, we expect this zone to be mitigated. So this one can be just a pullback, because on the 4 hour, it haven't switched a structure yet. We haven't switched structure. The internal and the fractal are bearish. It is on the 4 hour where the fractal has switched bearish. Even the 4 hour internal is bullish. So the daily fractal structure. Here was the high. So when price breaks below here, draw from here to where we got a break. Where is the last high? Here. Then we created this low. So from here to where we get a break. Where is the last high within here? Which low did we break? So if this is the last high that caused the break, this is just an internal structure, but this is an internal structure for this swing structure here, right? So looking at this fractal structure was just switching bullish to facilitate the pullback. Within this, we have another refinement zone within here. So we've already mitigated this. We've swept liquidity. Okay. Now, we share where next week, what next week is going to do. We are projecting how we will do the following week. So I will delete some name now. Then Okay, so here's daily the daily factor, daily factor. Okay, daily factor high, daily factor strong high. So daily factor strong high. That's why we have change of character here. This is daily internal strong structure. And this one is just a factor pullback for the daily. But now on the 4 hour, let's forget about everything what we did on the daily, and let's look fresh on different pair on the 4 hour and evaluate what we see. So on the 4 hour, yeah, I think I'll be operating within the same range. So we broke this in a breakaway. Now we are having a decent enough pullback. So we look at this because we did this one failed to break this low near the break-even. So now this one is one strong push. It's a pullback. After a break of structure, we are expecting a pullback. This pullback is quite strong because what you can see this kind of structure here was so as this one pushes strong to the downside, we expect a pullback, and after the break of structure we expect a pullback. I've already explained why we're expecting a pullback, and I said first of all I switched to the lines to show you what these things are. They say they are points, connections. They are just dots that have been connected. So now what we are going to do is we are expecting, using the analogy, we haven't reached the premium yet, and as price is within here, we can expect buyers to still be strong. Hence, this fractal is bullish. So after a fractal break of structure, which is this, we will expect a fractal pullback, which is now starting. So we expect this fractal pullback to happen into maybe the extreme. If it breaks this, then it means the fractal structure is continuing. The internal structure, the internal pullback has ended, and we are continuing. Now we are in pro internal. If price doesn't do that, you will expect the fractal structure to hold on, to into premium before any sell will come off. Right. Now, looking at what I've said about market structure, we are expecting the bearish swing pullback of this swing range. The fractal structure has already switched bullish, which is the earliest confirmation that the swing pullback is starting. The earliest confirmation that the swing pullback is starting. But it is not a true confirmation. When we get the fractal change of trend, or the change of character, we are expecting price to pull back to facilitate the internal pullback. Right? So when price change character here, we were expecting price to push to the upside for this fractal structure to hold, and at some point around here, the fractal structure will switch bearish, and then we will continue the move. This was the the trade idea. It didn't happen. It didn't happen. So we have what we have. We are following the referencing the 4-hour fractal structure. Now let me add something for me to make sense to me. So look, this was the last bullish range, right? Here's the last bullish range. When we extend this range, it was unmitigated. All of these lows didn't mitigate it until we had this. So we were expecting this to continue. It didn't. Rather, it formed a reaction, pushed into a demand region, and then shot up impulsively. So this was an unmitigated supply range, and then when price came into this zone, we had a reaction. This reaction failed. Rather, you will call it failed reaction. That is why we use FR. When we have a failed reaction, this zone becomes a flip zone. Now, I've already talked about demand mitigation. When we are looking at this, let's extend this. So this is series of demand mitigation. No demand has failed yet, which means we are expecting this zone to also hold, right? If this zone fails, then this is the earliest demand failure, the first demand failure, which means supply is continuing, but we have already had our first supply range failure, which has caused the flip. So we will expect the fractal pullback you expect the fractal structure to pull back into the flip, right, to mitigate the flip before you continue the move to the upside or before whatever. But the main idea is, here the flip zone. When price comes here, you will expect a reaction. Now this reaction will be facilitating the pullback. But looking at this, right, this is the first demand failure. It's supply failure rather. Looking at that, we are seeing that this low hasn't broken yet. We will only classify it to be a break when we have a candle body close. We will only classify here to be a break when we have a candle body close. So on the 4 hour there is the change of character. Here is the change of character. We are expecting this zone to hold. If this zone fails, then means the internal pullback that we were trading within has ended, and we will continue the lows. However, we are expecting much deeper pullback into premium, because after this zone, after this, this one was mitigated by this. So looking at this, here is a fully unmitigated area. If I extend this, it is also within premium. It is also part of demand supply mitigation, series of supply mitigation. Okay, this one swept liquidity. But I have multiple demand supply regions where I will be expecting price to turn around from, for us to continue the main swing structure, the main bearish swing structure. Because whatever we will do, the swing range, the low here is the low of the swing range that we will be trading towards. So we've swept liquidity. When price sweep liquidity, we will use it to mitigate the zone, and then we will continue the move. The reason why we are doing this is how prices move is price will create a range. Price will form a range, and then price will either initiate out of the range impulsively to the upside or impulsively to the downside. Let's say in this case to the upside. What will happen is, this one is the initiation. This push to the upside is the initiation. What will happen is price will start to pull back, right, to mitigate the zone, to mitigate this zone. When price mitigate the zone, we will continue the move. So the heartbeat of the market is range, initiation, mitigation, and continuation. So let's see real life example here. So this is a range. If I extend this my line here, you can see that this is the range. This is this one. This range is this range that we see here. What has happened is, we've initiated out of the zone or out of the range. This is the initiation, right? What is happening now is the mitigation. We are coming back into this zone to mitigate some of these orders, or even if you come to the mitigated extreme, for us to do what? to have the continuation. So looking at this one is um, supply range. So we have two unmitigated ranges here. One, I would like to cover the highs as well. So high one, and then the second, this zone here. These are the unmitigated extreme or unmitigated zones here. So looking at what I've already explained, we can see that now we are in the mitigation phase, right? Which means this price can be corrective, right? It can be pretty corrective because it is coming into this range to mitigate some of these orders, right? Before we will get the continuation. So if this is the case, it means when price is within this range, mitigation can happen anywhere. When price is within this range, mitigation can step in anywhere and we will continue to sell. But this is the reason why we pile this range with supply in market structure. That's why we pile it with market structure. So now my aim is to follow the 4-hour factor range to continue to buy, right, until the low breaks. If the 4-hour range, if the factor range change here, then it means the internal pullback has ended and we are continuing the move. But I think the highest probable trade will be here, right? It will be here because this one can be an inducement. We will be liquidating this into here before into this zone before we will continue. But from Monday going, next week, today is Saturday, so next week, this one is on the 4-hour. I think Monday we will get much more. Monday, Tuesday we will use price. I think there will be sales for those period before we get the buy that we are looking for. So this is the bullish range, but here's the flip zone. So I will be looking forward here, as I've already explained. Here is the range, right? This one was the range that we had. Price moved impulsive, and then we started to stop, and we initiated at the range. What is happening now is the mitigation. So when we mitigate the zone, we will expect the continuation. Now from what I've explained, what comes to your mind? I think I'm starting to link things because this is a demand range. We have this range. When we initiate out of the range, we don't expect this zone to fail. We expect this zone to hold and for price to continue. When we what we see is a change of character, right? So this one is also a strong structure. So when we are buying from these zones, we are buying from a strong structure and we are buying from a mitigated area, which is coming to give us the continuation. Okay, so if I'm going to sell, I'm willing to sell from this zone. I'm willing to buy from these zones. So we have this single candle pivots here. All of these zones had already been mitigated. This one is unmitigated though. But these zones, if we need inducement, so I will filter them out. So this is also within the zone. Now here, so on the 4-hour, okay, I shouldn't have done what I did. So now this is my setup on the 4 hour. From next week, I will expect much deeper into much push deep. For price to push deep into this before we will continue to move to the upside. So this one is my 4 hour setup. Let's move to this is where I trade, so I won't delete this. So here is where I do my execution, so I won't delete this one there. I won't use it. I will get different USD. No. Come and see you. Come and see. Come and see all the Lord has done. Come and see all the Okay. So the echoes in something with Tuasu back on the 15 minutes. Come and see all the Okay. So on the 15 minutes, you can see this strong impulsive move. And then we have this high here. Looking at this, we have the low. Here was the low. From okay, so when I drag this across, you can see here's the last low within the range. Okay, so the 15 minutes, here is where I take my immediate bias. Here is where I take my immediate bias. So this 15 minutes range is what I'm going to follow. Oh, I think yes, I'm making sense to myself because I've already made me 4 hour. I have the daily perspective. I have the 4 hour perspective, and now this is the 15 minutes. I know from the 4 hour that this one here is a fucking flip zone. It is a very damn good zone where price can turn around from. So when I'm on the 15 minutes, here is where we apply the phrases. Now, me, if I'm selling from, or if I'm willing to buy from this zone, these zones will be phase A. When we mitigate, let's say price has come into this zone, we've already delivered into here, and we've switched. We have switched the fractal structure. I can expect price, if my price comes into this low, I can expect price to continue. So looking at this, you can see that we have this zone here. So zone is where prices. Let me delete this one too as well. When we look at this, here is the swing range. This swing range, we will have a pullback. After a break of structure, we are expecting a pullback. Excuse me for a minute. So looking at this, you can see say here is the last candle. We moved impulsive to the downside. Okay. So here was the last candle, right? That failed to close above its candle side. Now price move it to the upside. And then we had this pullback here. Here was the last candle. So we were trading within this range. Here was the last candle that failed to close the candle's high. And we closed above it. So then here becomes our chalk. Here becomes our chalk. So let's see that place our change of character. You use here to be an internal break of structure for the 15 minutes. So for the 15 minutes, here the swing range, the fractal structure has already switched bearish, and we are continuing the structure. So looking at this, here the last candle, that even this one, it failed to close below the candle's low, but this one is below this range. So we had this impulsive move. We pull to the upside and continue. So on the 15 minutes, we are within this fractal range. Where is the strong structure? Here is the fractal strong structure with this change of character, right? So we will expect this one to hold from the fractal structure perspective. If this one breaks, it means the internal pullback has ended. This one is the internal structure, by the way. Here is the internal structure. Here is the continuation. So this one is just pulling back to facilitate the internal pullback, and then we continue. But if the internal pullback breaks, it means we are having a swing pullback, and then if we change character, we will continue until the next internal pullback, the next internal high breaks, and then we continue the the swing range. So on the 15 minutes, I have this zone here. You can see this one has been mitigated. It has been mitigated. This one is completely unmitigated. This one is unmitigated as well. So looking at this zone, price can price can turn around from any of these zones here, right? Because they are all within this range. They are all within this range. Here is the bullish range. Now we are expecting price to continue. So which zones will be my preferable range, or my preferable zone to trade? Let's look back here, paint the picture. So this one is a flip zone. It led to a break. This one also led to this one also led to a break. This one is also a valid structure, right? So this zone, we already use this as an inducement. But this zone, from the 4 hour perspective, and can flip, price can still go from here, but it is not within the flip zone. Looking at this, price has already pulled back into premium, sorry, discount. So cool, price can still continue, but let's see we price continue to the outside and we break this, we come back here and I'm targeting here. Let me see whether the risk to reward will be enough. So let's see if price is going to continue from here to here will be okay, cool. So on the 15 minutes, the 15 minutes, fractal structure, I will delete this, but I know this is the internal structure. We can have an equal lows here, but this is what has happened here right now. Can have an equals, and then price will come to liquidate the lows. From the fractal structure, this is just one straight move. Yes, so from the fractal structure, this zone is valid, for the fractal range, because the fractal structure is bearish, so we have to have a supply range. When price comes into this zone, for now, I'm bullish. I'm bullish. I'm expecting this swing rate, this fractal, the 4 hour fractal to hold, and I'm expecting this one to continue for us to fully break the 4 hour internal high. So I'm expecting buys, but I'm expecting to buy from here or down below this one as well, or whatever. But I'm expecting buys. If this one will change character and I have the risk to reward in my favor, I'll be looking for it to continue to buy. But from let's see if price continue to sell. If price continues to sell, I think, let's see, if we break this one, if we break the internal structure, then I can expect the internal pullback to happen, which can be a move maybe I can trade. And then I don't know, but I'm not the students. I don't know. I know what I know is I will wait for price to come into this my 15 minutes POI. When we change character, I will continue the move. When we come to the mitigated extreme, this extreme here, I won't wait for change of character. But when we come into this kind of zones here, I will wait for change of character before I will jump to the 4 hours, to the 5 minutes for execution. So that will be all for today. I'm tired.